All right, fellow AMC stockholders, XMAX Trading here. We're going to go over some important DD that's come out recently, and I also want to go over towards the end of the video some good bullet points from Twitter that I found pretty interesting. So go ahead and stick around for the video. Hit the subscribe button if you haven't already, and the like button, and let's get started. So, why AMC bullish shouldn't be concerned with the stock sale by AMC Entertainment CEO. All right. CEO has done the sales, but more clarification to the sale may be needed to clear up confusion. Aron sold 300,000 shares at an average price point of $22.85. The sale comes as several AMC executives have sold their shares of the movie company that saw a significant rise in valuation. In case of Aron, the sale was part of a Rule 10b-5-1 trading plan. The sale comes by Aron after it was announced in December that he sold about 312,000 shares in company, which followed the sale of 625,000 shares in November. What is a 10b-5-1? The exchange is passed in 2000 by the SEC Commission. The rule allows insiders of a public company a way to set up pre-approved plans to sell stock they own. The rule is put in place to help insiders being accused of insider trading. The rule allows sale of predetermined amount of shares to happen at predetermined time. Some rule plans are used to cover executives' compensation. The rule provides affirmative defense for corporate insiders and companies to buy and sell company stock as long as they adopted their trading plans in good faith before becoming aware of material non-public information. SEC proposed rules. Ginzer said the proposed changes will help fix potential gaps in our insider trading regime. So the SEC proposed changes Rule 10b-5-1 December 2021. Among the changes will be a cooling off period added for insiders for a new or changed plan. The change would prohibit overlapping 10b-5-1 plans and will limit plans to sell shares one time to one plan every 12 months. Aron took to Twitter on Wednesday to share details of the transaction that he announced on his 10b-5-1 plan back in August, and had no idea when the sale will take place. Back in August, a Chase 10b-5-1 plan spread over 3 months. Those sales are now finished. I'm still own or plan to invest 2.3 million shares of AMC. I'm in. SEC filing also shows Aron could have 780,000 shares issued based on continued service and 1.31 million shares based on performance goals. Along with the shares Adam currently owns, the CEO could own 2.3 million shares in the future, something highlighted in his tweet. In December, Aron said that 62% of his annual pay is in AMC stock, which he sold as part of his estate planning. As the CEO of a highly visible publicly traded company, Aron's sales, whether timed or part of pre-plan plan, could be highly scrutinized. Tesla sold a portion of his 2021 move as though tax purposes, sold solely to satisfy the reporting and personal taxes without withholding obligations. AMC has been a battleground stock, attracting a large following of retail traders who rallied against the hedge funds who were short the movie theater. AMC is one of the 10 most searched tickers on Benzinga Pro in 2021, which highlights how popular the company is and the stock has become. Wow, they came out and admitted it, guys. And they came out and admitted that, Adam Aron selling 300,000, but still having 2.3 million shares. I mean, it's a drop in the bucket. Shares up 0.3% to 2280. Shares up, yeah. So I think it's pretty exciting stuff. Here's an interesting article that came out. Roundhill launches a meme stock ETF. I don't think this is good for us, to be honest. So-called meme stocks have been all the rage in 2021, fueled by intense social media attention, Robinhood, and new investors getting into the stock market for the first time. Stocks that were off the radar, as even as a year ago, right, like AMC and GameStop, have drawn huge interest. Retail traders have driven these stock prices to the moon with aim of sticking it to big Wall Street hedge funds who often short these names. Meme stocks explain. The Roundhill Meme ETF is designed to offer investors exposure to meme stocks by providing investment results that track the performance before fees and expenses. Meme stocks are equity securities, including the American depository receipts of companies that exhibit a combination of elevated social media activity and high short interest. According to Investopedia, short selling is an investment strategy, speculating the decline of a stock. Platforms such as Twitter, Reddit, Discord, and StockTwits have been home for millennial investors who amplify the ability to share and consume research and investment ideas. 2021 has been a record-setting year for user growth on Wall Street Bets, subreddit reaching 11 million users as of November 2021. Wow, that's pretty impressive. After beginning the year with just 1 million. So you got Twitter, Reddit, Discord, StockTwits. As often as is the case in the ETF industry, a new fund launched just this week to capture the trend. Roundhill Meme ETF will track index that consists of 25 equal-weighted U.S. equity securities that exhibit a combination of elevated social media activity and high short interest. This gets me worried they're trying to use it to short, because they're going to short this ETF, I bet. Roundhill is perhaps the ideal ETF because it fits so well with the rest of our lineup. The company already has an esports and digital entertainment, nerd, betting and iGaming ETF, Bets, Pro Sports ETF, MVP, and the Roundhill Ball Metaverse ETF, Meta. Roundhill is quickly building itself up as a major player in the thematic ETF space. Roundhill Meme ETF, focused on elevated social media activity and high short interest, captures the essence of what places such as WSB, Message Board are all about. It's not trying to redefine what made meme stocks big in the first place, nor is it trying to add extra criteria to water down its exposure. It's simply aiming to identify the most popular names at any given moment. The fact that the index rebalances itself every 2 weeks allows it to stay on top of rapid sentiment change. 25 holdings in ETF include AMC, GameStop, Robinhood, DraftKings, and Palantir. So we got Snap, so DWAC, Roku, Snap, DraftKings, Wish, Upstart, Clove, SoFi, TDoc, Hood, AMC. So AMC was equal weighted, so 4.01%. Shares, about 3,000 shares. Chegg, BlackBerry. I don't know. I'm just worried about this. While we see many ETFs sort of miss the mark with the universe or theme they're trying to capture, I think Meme does a pretty good job of identifying what's popular with this crowd of traders outside the equal weight holdings, which I think makes a lot of sense. The fund makes no attempt to limit concentration or diversify in any way. It's simply identifying the hot meme stocks of the moment, which is exactly what the fund such as Meme should be doing. You essentially want the concentration. That comes with a fund like this. And the 0.69 expense ratio is about in line with what I expect. 69%. Are they trying to screw you? Most ETFs are like 0.05%, right? Or 0.01%, maybe 0.1%, but 0.69, boy, that's boy, they're telegraphing that they're screwing you. I suppose it goes without saying that investors in memes should expect volatility. If there's a drawback, it might be the meme stock craze likely peaked earlier this year, and much of the air of the bloom have already deflated. I don't know about that. Benchmark index for memes dropped more than 20% in just the past month, and pullbacks could be relatively common. Overall, I like the structure of meme and how it's built, and I think Roundhill is making another nice addition to his lineup. Whether that translates to big investor returns remains to be seen. I think they're going to short this ETF. We need to keep a track of this ETF and see how it's going down. Because AMC is in IWM and it's in maybe at one point it was in the Russell 2000, but I did be in for sure. Now it's in this ETF. They're going to short the heck out of these ETFs. So here's the last goodie of this video. Some highlights from Twitter. So remember, Amazon fell from $110 to $11 before going to $3,000. Bitcoin dropped $20,000 to under $4,000 before going to $60,000. These two took time, right? Tesla went from $300 to $180 before going back to $2,000, right? Tesla has its own short squeeze. The trick isn't just picking the right investments, it's holding them, right? Not financial advice. You have to do your own research and your own DD and only risk what you're willing to lose, It's just hard. So it's not financial advice. Pertry from Twitter, AMC, look how much they're shorting the IWM ETF just to keep AMC down. This is insane. So the current short interest, 34% on IWM. I mean, 20% is extremely high. This is 34%. Free float on the loan. Days to cover, that's kind of low day to cover. Current shares on loan, 23.1 million. But still, That's a lot. That's huge on IWM. This is a screenshot of Ortex talking about GameStop, I think, last week. Someone talking about utilization is at 80%. Cost to borrow, days to cover 4.89. Holy moly, that's huge. 4.89, dude. That's even worse than AMC. AMC is like at what, 2.23 or something like that. Days to cover is 4.89. Short interest is 17%, supposedly. Free float on loan, 20%. Utilization is 80%. Wow. 80% of the shares that could be shorted are on loan. So that was kind of interesting. That was a big deal. We'll see what finds out. And AMC. A equals MC squeeze. That's a pretty cool picture. Zitty Capital, slew of attention from the market media shows we are in the right place. Sentiment of the market media articles does not matter. If they are investing their resources into writing these articles about AMC, there is a reason. There is a reason. Hodl and loading. There's still a slew of attention from the market media that shows we're in the right place. Sentiment doesn't matter. It's just they're putting in resources and talking about AMC. It matters. Just to recap the few recent points regarding Citadel. They notified their investors they are not able to withdraw any funds. It's locked. That I thought was really important. This is from Stock Twist, but this is really kind of crazy. Federal Reserve notified the prime brokers of banks not to loan any more money to the hedge funds. Citadel, in a desperate move, in the first time in the company's history, struck a deal for $1.5 billion partner to help buy a little more time to avoid the inevitable margin call and liquidation that's going to take down the entire corrupt system. I know that's pretty, and that's not financial advice, but it is crazy. You got to remember, Citadel. Should I say, hey, investors, you can't withdraw your funds unless it's like 6% every quarter or something like that. So they're locked in; they can't do anything about it. And if this is true, I don't know if it's true or not. Federal Reserve saying don't lend more money to the hedge funds, and Citadel had to sell off a chunk of their company, right, to Sequoia or whatever it was. So I don't know. I think this is pretty amazing. We just got to keep holding. And this stock is so popular across the world now. I think we're on the right movement. Not financial advice. So anyway, guys, hit the subscribe button if you haven't already. Like button. Leave a comment. I'll see you in the next video. See ya.